Here's something that nobody told me about buying my first house in Florida, and honestly, it cost me. The purchase price of a home is not the biggest financial decision you're making. I know that sounds insane. Like, of course, the price of the house is the biggest deal, right? Well, no. And I'm going to explain exactly why. Because there is a financial ecosystem surrounding every property in the state that will determine whether your home is a wealth building machine or a slow financial bleed that you don't even feel until it's too late. Quick note, if you're serious about buying in Florida, there's a link in the description where you could book a call with our team and we can help you build a plan around all of this. All right, back to it. So let me set this up. Most first-time buyers, and I'm talking about smart people, six-figure household income, doing their homework, they're running numbers on the purchase price, they're looking at the mortgage payment, maybe they glance at the property taxes and they think that they have a picture of what this house costs. They don't. They have maybe 40% of the picture. And the other 60%, that's the ecosystem. That's insurance carriers, HOA boards, local tax assessors, flood zone designations, and climate exposure that nobody, not the listing agent, not Zillow, not your well-meaning uncle, is laying out for you in one conversation. And look, I'm not saying this to scare you out of buying. I'm saying this because something can seem affordable on the surface, but in reality, it's not because of all the hidden fees and costs on the back end. So let me walk you through the 5 forces outside the 4 walls that actually determine what your home costs you long term. And I'm saving the biggest one, the one that surprises everyone, for about halfway through. So stick with me. Number 1, and this one is the most important. People learn about way too late, which is insurance. Florida is the most expensive state in the country for homeowners insurance. The statewide average is running somewhere between $3,800 and $4,000 a year for basic homeowners policy. And that's the average, meaning plenty of people are paying way more. Coastal homes in places like Boca Raton can run well past the average because of hurricane and wind exposure. And here's what really gets people. That's just your homeowners policy. That doesn't include flood insurance, which is a completely separate policy. Standard homeowners insurance in Florida does not cover flood damage. Let me say that again, because I've literally sat across the table from borrowers who didn't know this. Your home insurance does not cover flooding, not from hurricanes, not from storm surge, not from heavy rain. If you're in a FEMA designated special flood hazard area, that's a zone A or V, your lender is going to require you to carry flood insurance, period. And NFIP flood policies in Florida average around $800 to $900 a year. But in high-risk zones, you could easily be looking at several thousand annually. And here's the part that makes my head spin. Roughly a quarter to 30% of the flood insurance claims in Florida come from properties outside of the high-risk zones. Properties where flood insurance wasn't even required. People who thought they were safe. I had a borrower last year who found the perfect house in a moderate risk zone, ran all the numbers without flood insurance, and then 2 weeks before closing, found out the property had a previous flood claim. By law in Florida, sellers have to disclose that. The flood insurance quote came in way above what they budgeted, and it completely changed the math on whether this home was affordable. That deal almost fell apart. So here's the maxim. In Florida, you're not buying a house, you're buying into a climate exposure profile. And that profile has a price tag that shows up every single month in your escrow. Number 2, and actually let me back up for a second because this one is connected to insurance in a way most people don't think about. Your HOA. If you're buying a condo or a home in a planned community in Florida, you need to understand that HOAs are not just about keeping up the grass and telling you what color to paint your mailbox. After the Surfside condo collapse in 2021, Florida passed sweeping legislation requiring structural inspections and fully funded reserves for condo buildings 3 stories and taller. These are called structural integrity reserve studies. And as of 2025, associations must be fully fund reserves based on those study recommendations. They could no longer waive funding for structural components. So what does that mean for you as a buyer? It means that HOA fees are going up across the state. In many communities, significantly. Because boards that spend decades kicking the can down the road on maintenance now legally can't do that anymore. And if the reserves aren't there, special assessments. I'm talking one-time charges that can hit owners for thousands or even tens of thousands of dollars to cover structural repairs, roof replacements, elevator modernization, whatever the building needs. Nearly 900,000 condo units in Florida are buildings over 30 years old that are subject to these mandates. That's not a small number. So when you're looking at condo and the HOA fee seems manageable, you need to be asking, what does the reserve study say? Is the building compliant? Are there pending special assessments? Because if you buy a building with underfunded reserves, you're inheriting that financial liability on day one. And your lender might not catch it, your realtor might not flag it, but it will find you. Okay, what I'm about to explain is the part that changes everything. If you've been following along, this is where it all clicks. Number 3, and this is a big one, property taxes in Florida, and specifically how the system works for first-time buyers versus people who've been in their homes for years. Florida doesn't have a state income tax, which is great, but that revenue has to come from somewhere. And a huge chunk of it comes from property taxes. Now, here's where it gets interesting. Florida has homestead exemption that reduces your primary residence's taxable value by up to $50,000. The first $25,000 applies to all property taxes, including school taxes. The additional $25,000 applies to non-school taxes on assessed values between $50,000 and $75,000. Sounds great, right? Well, it is. But here's the thing that nobody explains to first-time buyers. The real power of the homestead exemption isn't just the $50,000 reduction. It's something called Save Our Homes, which caps your annual assessed value increase at 3% or the consumer price index, whatever is lower. That means that your neighbor who's been in the house for 15 years might be paying property taxes on an assessed value way below the actual market value, while you, the new buyer, are paying taxes on the full purchase price. Same neighborhood, same size house, wildly different tax bills. I had a client who was buying in a community where the previous owner had lived there for 12 years. The seller's property tax bill was comfortably low because of the Save Our Homes. My client's first tax year bill, significantly higher because the assessed value reset to the actual purchase price. Same house. And the only way they found out was because we ran the numbers before they committed. If you want to help applying this to your specific situation, understanding exactly what your tax picture looks like on a property that you're considering, book a call with our team and we can help you build a plan around this. Link is right below this video. Number 4, flood zone designations. And I don't just mean whether or not you need flood insurance, I mean what the flood zone does to your resale value, your insurance options, and your ability to even get coverage in the future. FEMA's Risk Rating 2.0 completely changed how flood insurance is priced in Florida. It used to be based on broad geographic zones and elevation. Now it's based on your individual property's risk, distance to water, first floor height, home value, replacement cost, all of it. And here's what that means practically. Your flood insurance can increase up to 18% per year until it reaches the full risk-based premium. So that price you see today might not be the price you're paying in 3 to 5 years. It's on a glide path. I see first-time buyers run the numbers based on current flood insurance costs and never account for the fact that those costs may be artificially low because of the federal cap. The true actual rate could be significantly higher, and FEMA is slowly closing that gap. You need to know exactly where your property falls on that trajectory. And if you're buying insured through Citizens, Florida's state-backed insurer of last resort, there's a whole separate conversation because by 2027, all Citizens policyholders with wind coverage will be required to carry flood insurance regardless of their flood zone. That's a cost that a lot of buyers in moderate risk areas aren't even thinking about yet. And number 5, regional price variation and what I call the invisible cost gradient. Florida is not one market. I cannot stress this enough. The difference between buying an inland community in Central Florida versus a Gulf access canal in Cape Coral or a beachfront in South Florida isn't just the purchase price. It's the entire cost structure that follows you for the life of that property. Insurance premiums alone can swing 50% or more based on your proximity to the coast, the age of your roof, and whether your home was built to modern wind mitigation standards. A wind mitigation inspection, which is literally someone coming out to verify things like roof-to-wall connections and opening protections, can save you hundreds or thousands per year on insurance. But most first-time buyers have never heard of it. And don't even get me started on hurricane deductibles, which are separate from your regular insurance deductible and are calculated as a percentage of your dwelling coverage, typically 2 to 10%. So on a home insured for $400,000, your hurricane deductible could alone be significant. That's out of pocket before insurance pays a dime during a named storm. You need to know that number before you close, not after the first hurricane warning. So here's the bottom line. When you're buying a home in Florida, especially your first home, especially at the 350 plus price point, you are not making a single financial decision. You're buying a membership into a financial ecosystem. Insurance carriers, HOA boards, tax assessors, FEMA flood maps, climate exposure, and every single one of those forces has the power to change the economics of your home after you buy it. The purchase price is the door. What's behind that door is what actually determines whether this was a good decision. The people who get burned, they stop at the purchase price and the monthly mortgage payment. Don't be that person. If this helped you to see your situation differently, do two things. Book a call with our team, and we can help you build a plan around your specific numbers using the link in the description, and hit subscribe so you don't miss what's coming next. Because I promise you, the next video is going to break down exactly how to run these numbers for any property in Florida so you never get caught off guard. I will see you there.